Welcome to my very first YouTube channel. In this video, I'm going to show you how I made $670 in 29 seconds. What you need to know is that I am trading the ICT methods. I have been trading the fair value gaps and IFVGs for a while now. I have shifted from Forex to futures market in about a year ago. And ever since then, I did it with fair value gaps. So that's mainly how I trade. Lately, however, I have discovered something new, and that's the opening range gap. I didn't know about this method. I only started learning about it a couple of months ago first, and then I decided to try it on a funded account. I have managed to pass an account in 2 days with this method. It's very simple, very quick, and very effective in a lot of different ways, which I will go into details a bit later on. First things first is that, as you can see, I have the opening range gap highlighted on my screen. And the way ICT teaches is that you are shifting the electronic trading hours session to regular trading hours. That's how you can get the gap. So how do I get the opening range gap? It's very simple. The previous day's close, which is 4:14 p.m. The candle closed up to the next day, which is the current trading session opening time, 9:30 a.m. So basically, previous day's close to the current session's open. That's your gap. It can be very big. Sometimes it's very small. So just make sure that you are measuring it on the spot so you know what's happening. And then after that, the only thing I'm doing is I'm waiting for the first presented fair value gap to appear. Usually the first presented fair value gap appears quite fast, but sometimes I can wait 15, 20 minutes, half an hour. So don't be alarmed if you are trying to catch this type of trading method from ICT and you're literally just sitting, waiting, doing nothing, because I have done that. So basically, what you can see is that I decided that the price will probably go down lower based on a lot of different things, based on higher time frame and based on other things. I'm not saying the price will go down significantly at that moment, but what I'm looking at is that I can see the price is very much wanting to go down. So when price pulled back very quickly, very fast into the middle area of the first presented fair value gap, I decided to just short. The reason why I'm not letting my trades run is because I'm trading funded accounts. And on these funded accounts, I have to measure how much profit I take. And I have to take profits because of their rules and the way they work. So I'm always trying to be quick and as fast as possible with taking profits and not linger too much. And then as soon as I'm done and I have my profit, I also exit very quickly and I just leave the screen and just get on with the rest of my day. What I like to highlight on my trading chart is a mixture of things. Equal highs and equal lows. I like them. I like to target them. They're very great to target as a liquidity target. I like to highlight the new week opening gap, the new day opening gap, obviously the opening range gap, and the first presented fair value gap. The new week opening gap and the new day opening gap, I use them as targets because they are great liquidity points. Also, they can be used as some kind of support and resistance if you want to think about it in terms of support and resistance, but I don't really use them like that. I just use them as targets, basically. Also, I would like to address my chart. If you feel like my chart is a little bit messy, there are too many things on it and you don't know what's what, don't worry about it because this is my chart and everything that I highlighted it for a reason because every single thing helps me make a decision. And if it feels confusing to you, I'm sorry about that, but it's helpful for me. As you can see, about an hour later, price has moved in a quite interesting way. First, it closed above the first presented fair value gap, took out some equal highs, bumped into a 1 hour fair value gap, and then decided to drop back down all the way back to the bottom of the opening range gap and the new day opening gap. That's why I like to target the new day opening gap and the new week opening gap, because they are an amazing target. Even if you are like 100 or 200 points away or 50 points away, you can easily target them, and they're great targets as well. According to ICT, what he is saying in his videos where he's talking about the opening range gap is that 70% of the time, price will go down to 50% of the opening range gap. So if you want to be consistent, if you want to know what to target or where to look for, and if you feel like it's just the target is too big, the whole opening range gap, I would suggest to just target 50% of it, or just take profit as soon as you feel comfortable with how much you made. You don't have to linger just for the sake of it. If you liked my video, please like, subscribe, and comment down below. And see you in the next one.